Grab released their latest quarterly figures Tuesday after the market closed, and they had an earnings call for me in the middle of the night, for you probably late last night. The structure here is very, very strange. But anyways, it was a pretty good quarter, I believe a beat across the board, and guidance was raised a little bit. Now, at the time of making this video, the stock is down 3.6% because of macroeconomic data. GDP contracted by 0.3% in Q1. Are we surprised? No, to be honest, not much. But of course, now the recession fears will start to pick up yet again. Remember, for a recession to actually be a recession, you need 2 consecutive quarters of a GDP contraction. Will we get that? Remains to be seen. We'll have to wait another 3 months. Plus, you always have a couple of GDP readings. Every time we get a revision, things might change. But let's talk here about Grab specifically. I have no position in that company. It's a company that I've been following for a while. I do have exposure to Grab through Uber. So if you hold Uber shares, you have exposure to Grab because Uber does still own around 13 to 14% of it. So I'm happy with the exposure that I have, but I do still think, like I said in the past video, I do still think that this can be a long-term winner. Now, right now, it has a market cap of around $19.5 billion. Now, remember, I did get a lot of hype on social media, and yes, in the last 12 months, the stock is still up around 30% or so. Year to date, we will go down now to around 5% for the year. But to me, Grab is pretty simple. If you want to get exposure to Southeast Asia, you can go with Grab. You can also go, by the way, with Sea Limited. If you want to go with Grab, you get that exposure to Southeast Asia. You get a player that is very, very dominant in probably the largest countries there. I'll talk a little bit more about that. You get the super app exposure as well. And by the way, when we talk about Grab, of course, we're only talking about the people in those countries, right? In Indonesia, in Vietnam, in Thailand, in Singapore, in Malaysia, etc., etc. But I'll show you, based on a survey, that a lot of tourists are also using Grab. And this is something that doesn't get talked about much. So let's dive right into this. If you enjoy this type of videos, hit all the buttons, especially the subscribe one. We really appreciate that. If you want to support me even further, do check out the link down in the description and in the pinned comment with the top 10 best stocks to buy now, or go to fool.com/couchinvestor. Thank you very much. And for those of you that have been using my FinChat link, thank you very much. And for those who haven't, well, there is still that 25% promotion running up until Thursday. Links down in the description as well. All right, let's start with some comments from the CEO and CFO. Fourth quarter was our strongest quarter ever. We finished 2024 with on-demand GMV growth accelerating to 20% year over year, and as we continue to generate profitability at scale. We have more users on our platform than ever before, and our unique platform advantages place us in a strong position to continue this growth momentum into 2025 and to deepen user engagement across our ecosystem. We outperformed our revenue guidance for 2024 while demonstrating our ability to scale the platform profitably as we deliver a record full-year group-adjusted EBITDA of $313 million and adjusted free cash flow of $136 million. These are important milestones for us as we look to maintain our growth momentum and cash generation capabilities while remaining disciplined in making strategic investments to strengthen our ecosystem and enhancing shareholder value. Now, of course, you might ask, what about that GoTo acquisition, the rumors? Are those true or not? Of course, they're not going to tell us yes or no during an earnings call. But I always like to say, where there is smoke, there is fire. All right, so for the quarter, what did we get? On-demand GMV did increase 16% or 17% on a constant currency basis. Group MTU continues to increase here, we're up 16% to 44.5 million. Partner incentive is up 22%, consumer incentive 20%, and the loan portfolio did grow by 56%. Overall revenue increased by 18% year over year, a nice reacceleration, continued reacceleration actually. Operating loss did improve 72%, although still a loss here. Profit for the period was $10 million. Total segment adjusted EBITDA grew 26% year over year. Adjusted EBITDA increased 71% year over year. And adjusted free cash flow non-IFRS did decrease 5% year over year. Now, purely for revenue, as you can see, since the September quarter, we did see revenue accelerate. So went from 16.4% year over year growth to 17% to now 18.2% year-over-year growth. And of course, as we will lap those easier comps, the year-over-year comparisons will look better and better. Moving on to the segments. So we have deliveries, we have mobility, and we have financial services. So for deliveries, that increased 18% year over year to $415 million. GMV for that segment increased 16% to $3.1 billion. And segment adjusted EBITDA increased 50% year over year, 2% of GMV to $63 million. As for mobility, that did increase 15% year over year. GMV for the segment increased 17% year over year, and segment adjusted EBITDA increased 16% year over year to $159 million. So all going in the right direction. As for financial services one, which is the only one here where segment adjusted EBITDA is still a loss, and it did increase a little bit. But here we can see revenue increased 36% year over year. Loan portfolio, as we've seen, was up 56% year over year. And here segment adjusted EBITDA still a loss of $30 million. And they said the following: segment adjusted EBITDA losses for the quarter increased by 9% year over year to negative $30 million, with an increase in expected credit loss provisions as we continue to increase our loan disbursals. We continued to maintain a prudent stance on credit risk, with 90 days non-performing loans or NPLs within our risk appetite. We continue to focus on lending to our ecosystem partners through GrabFin and our digibanks, with total loan disbursed growing by 30% year over year to $630 million during the first quarter. Our total loan portfolio outstanding at the end of the first quarter grew 56% year over year to $566 million, up from $363 million same quarter last year. Customer deposits in GXS Bank, Singapore, and GX Bank in Malaysia grew strongly to $1.432 billion in the first quarter from just $479 million same quarter last year, and from $1.225 billion in the prior quarter. We are able to achieve continued growth on a quarter-over-quarter and year-over-year basis for our deposit base, highlighting the strength of the digibank's ability to leverage the Grab ecosystem. Of course, having a fintech side of things is very lucrative. We just have to keep in mind that this is still early days. Then moving on to outlook for 2025. So revenue outlook remains unchanged, $3.33 billion to $3.4 billion. It's an increase between 19 to 22% year over year. But group adjusted EBITDA did get a guidance raise here. So now they're expecting this to grow 47 to 53% year over year, up from the prior 41 to 50% year over year. So pretty good to hear. Moving on to two things that they mentioned during the earnings call. One, the advertising side of things. The number of monthly active advertisers on the self-serve platform increased by 49% year over year, and their average spend increased by 30%. Advertising revenue as a percentage of delivery GMV expanded to 1.7% in the first quarter, up from 1.3% in the prior year period. Again, this is also early days, but having an advertising business is, of course, very, very lucrative for the long run. As for competition, they said that they outgrew their closest competitor, and there is continued consolidation in the market, such as Foodpanda leaving the Thai market. Now, why is that such a big deal? And then we're going to touch back on what I said at the start of this video when we talk about tourism as well. So if we look at here, 2024 food delivery gross merchandise volume in Thailand, Vietnam, Malaysia, Singapore, Indonesia, Philippines. Do you see the trend here? Grab is the number one. So Grab retains its leading market share in Southeast Asia. Shopee Food overtook Gojek, Goto acquisition target for Grab according to the reports. Now, in Thailand, Foodpanda is this one right here, 5%. So 5% is going away from that market that will go to, well, either the number one player, the number two player, or maybe, who knows, maybe Shopee Food as well. But look at how strong Grab is in each of those countries. Now, more recently, we've had a Grab survey that said the following. According to Grab survey conducted among users in 6 countries, Indonesia, Malaysia, the Philippines, Singapore, Vietnam, and Thailand, with responses from over 11,000 participants, 81% plan to travel internationally, an increase of 72% from the previous year, while over half, 52%, prefer destinations within Southeast Asia, followed by East Asia, 44%, including China, Japan, and South Korea. Thailand ranks as the #1 most popular destination, followed by Singapore and Malaysia. Now, again, just because they travel does not mean that they will not use Grab. No, the beauty of Grab and its ecosystem and where they operate is that, well, it is dominant in all of these countries right here, which means that if, let's say, you travel to the Philippines, you travel to Indonesia, you travel to Singapore, Thailand, whatever, you do a whole trip, the only thing that you need is one app. One app to rule your whole trip. So it's the same app that you will use when you are at home, and it's the same app that you will use when you travel. It's a win-win, right? Because usually when you travel, you will not use the same things that you use at home, because maybe the app, the businesses don't exist in the place that you're going. Well, not with Grab. One extra thing here. They said the following. The data shows that every 1 in 2 tourists use the Grab application while traveling in Southeast Asia, even in Indonesia. The trend affirms Indonesia's consumer preference towards mobile devices on the way. So here again, you're not only benefiting from the locals, which of course it's a huge total addressable market, but you're also going to benefit from the huge travel industry, right? I was actually a Grab user 10 years ago in Thailand. Arnie, my brother from another mother, is now in Indonesia. Guess what? He's also using Grab. My cousin was in Vietnam a couple of weeks ago. He was also using Grab. So the opportunity is definitely there for Grab to become a huge company in that region, benefiting, of course, from a lot of these countries actually growing and maybe becoming economically a bit more powerful as well, but also benefiting from the fact that, well, those are amazing travel destinations. And if I'm going to travel in those areas, of course, I am going to download Grab and I'm going to spend in the Grab ecosystem. It makes total sense. So all in all, yes, it's true that the stock hasn't really moved much this year. Yes, it's true that even in the last 6 months or so, you will probably only be up around 10%. Fine. But if you believe in the long-term success of this company, if your bull thesis is the same as mine, even though I'm not a shareholder right now, I just have indirect exposure to it, then $19 billion, $20 billion in market cap will look quite small a couple of years in the future. So all in all, that's about it for me in this video. Do share your thoughts down in the comment section below. Like, subscribe, do all of that, and I'll see you all in the next one. Bye bye.